Hey traders, Stephen Quitzel here. It's Thursday afternoon. We're going to do some things a little bit different today. We're going to look at the indices and then we're going to go through a watch list and just, I truly think the best way to get better and constantly be working on your skills is just to kind of go through charts, try to be observant as you can and learn from that. So we're going to go through one of my watch lists and we're going to look at some stocks that I think look interesting. We're going to look at the indices and going to look at some sector summaries. So real quick, before we get into all that, I do want to throw a disclosure up here. Okay. Let's start with the Nasdaq here. So it was interesting because on Tuesday you had a pretty nasty reversal day right here. You can see that the above average volume, or at least up to average volume, you can see how quiet. Let me scroll this up. You can see how quiet it's been on this uptrend, which, the price, you follow price first because that's what matters. Price and volume, and then you look at your secondary indicators. So it's in an uptrend, clear as day. You have to call it an uptrend because it's at an all-time high. So then you get a reversal, right? It kind of creates this little flag and then breakout, kind of a nasty reversal. Well, then yesterday, or Wednesday, then it negates that and closes above it, but the volume is a little bit below average. And then today you have this big down day in the Nasdaq, which is a lot has to do with Facebook. So it's interesting sometimes when all of a sudden you get indecision and you get tugging and pulling. So we're in an uptrend. I found this uptrend just to be a little harder to play. I've got whipsawed a couple times. So you're in an uptrend and then all of a sudden you get, something that kind of opens your eyes and then you get some tugging and pulling. And if I can even take it back to, let's just say this right here, you're in a neat little uptrend and all of a sudden you have a down day, comes down, touches the 20-day moving average, gaps up the next day, and then it reverses going the other way. So you had 1, 2, 3 days of indecision. Now you have 1, 2, 3 days of indecision. So my only point is when you get to, when you start to notice just the tugging and pulling, just paying attention to if there's accumulation or distribution, because sometimes that can tell you who has the upper hand. At the end of the day, how I feel is I just use a simple moving average to, if it's above the 20-day moving average, we're in a rally. If it's above the 50-day moving average, we're still in an uptrend. And then obviously if it goes below the 50-day moving average, you're in a deeper pullback or correction mode. So strong market, but you can see last time you had a little rally, and then it came back down and found support at the 50-day moving average, came back above. And now it's kind of doing some tugging and pulling. So I'm watching, not necessarily, it didn't really find support the last time at the 20-day moving average. So I'm more looking down here. But the case, there's more cases for the bulls right now than there is the bears. There really is. I don't know how you argue otherwise, but it is getting a little bit choppier. So it's really worth paying attention to and taking note. Now, if the S&P looks a lot different. One, it did never come to an all-time high, but it is in a little bit smoother uptrend. And there is some accumulation on the S&P 500 chart, so that's a positive. This is pretty neat and steep in the S&P 500, so tech stocks are just a little bit more sloppy in the last couple of days. But you can see that this uptrend, every time it has gotten close to this, it has pulled back to at least down here or the bottom trend line. So it doesn't really seem to me like this uptrend really cares about the 20-day moving average, more just grinding its way higher, but we are at the upper end of the range of this top trend line. So just really keep that in mind when you have certain expectations that are set. Maybe it makes more sense to be patient, let the market come to you, instead of, just buying as it's, going straight up. And I know that's tough. Believe me, I know that's tough. There's nothing worse than watching a market or a stock take off without you. But, over time, I think you'll do just fine. Okay, so obviously that looks a lot different than the Nasdaq. Let's go to the Russell 2000, the small caps. So, and then you have the small caps, which started underperforming the S&P 500 right as about the dollar hit the resistance. We can look at that here in a second. So you had a pretty good pullback with the Nasdaq, right? They both came down and found support at the 50-day moving average. Came back, tried to test the high, couldn't close above it. Tried to do it again a couple days ago, and it's leading today, but is definitely consolidating right here. So we'll have to wait and see what happens here. But the Russell 2000 definitely can have a mind of its own, where it seems like the Nasdaq and the S&P 500, they move more in tandem together. Sometimes the Russell 2000 can just absolutely smoke them and absolutely underperform. So I don't always like to look at the small caps and say, oh, it's risk on, risk off, because just the more I look at it, the more I don't think they always track at least consistently enough the way they should. But it is worth noting that small caps, they could not hit at an all-time high this latest time and got slammed on Tuesday with the Nasdaq. So we'll keep an eye on that. One thing that I actually have not looked at a while that I wanted to look at, and this is something I learned from one of the stock charts guy, is the consumer discretionary versus consumer staples relative ratio. And this is definitely a secondary indicator, so I don't go out making trading decisions, but I just like to look at it from time to time. So you got a daily chart here, and the black and red is the consumer discretionary stocks versus consumer staple stocks. You have the more aggressive sector and you have the more defensive sector. So when the line's going up, that's definitely bullish, and when the line's going down, that means money is rotating to your cereals, the recession-proof type stocks, right? The Ketchups, the Kellogg's of the world. So, anyways, one thing that's worth noting, and then the gold line I have overlapped the S&P 500. So I like them to move together because it means when the market is going up, you have more aggressive stocks moving up with it, and vice versa. Well, as of the end of May, this ratio topped, and money has been flowing more into staples than it has been into discretionary stocks. And you can see right here them crossing. So you see that since really the last 2 months, at least from a discretionary staple standpoint, staples have been outperforming discretionary while the market is moving higher. So that's just something worth noting. I'm not going to say red flag, negative divergence all over the place, but a lot of it I think has to do with the summer months where, even if you go back probably to next year, actually, that's kind of got me a little curious to see if it was seasonal last year. And you can see last year right here in May, pretty much went down a little bit, meaning staples started outperforming and then came back up and then starting outperforming again. So a lot of it can have to do with seasonality. Managers set themselves up for the summer months just to have a little bit more staples in their portfolio, because historically, the August-September timeframe is the worst timeframe of the year. So it's worth noting how these are now crossing, how one is going down and the other is going up. So again, there is way more evidence for the bulls than the bears right now. I try to look at everything though. You have the S&P 500 breadth is still definitely on a bullish signal, where you have 71% of stocks in the S&P above the 200-day moving average. Same thing with the 50-day moving average and the 20-day moving average. So it's hard to say, hey, we're in bearish territory, or I think the market's going to go down. Is the market a little extended? I think so. But it's just something worth noting. If we go back a little bit, just kind of take a look-see to see what is showing some strength. Today you have the energy sector leading, and industrial, that's bullish. And then staples and utilities are right behind us. Technology is getting whacked because of Facebook. So there's no surprise there. We'll look at Facebook stock here in a second, just because part of it intrigues me, probably not for the reason that you think, and we'll talk about that here in a minute. But, for the most part, I'd say it's kind of a mixed bag. I think right now you really have some diverging indices, and it should be interesting to see how this plays out. in the last 1 week, energy and industrial are also leading. That's bullish, right? With financials and healthcare up there, utilities are down here, staples are in the bottom half. So you don't always get exactly utilities on the bottom, technology at the top. You have a lot of rotation that happens over the years and throughout the given year. But for the most part, I'd say that, you know, money has been strong. You just had a really nasty reversal day on Tuesday. So outside of that, I think there's just more cause for the bulls. Now I want to pull over a watch list chart. And I really just want to do something a little different this time. Instead of just overanalyzing the sectors and everything, I want to really analyze some charts. This is a watch list of mine. Don't go out and buy this stuff blindly. Do your own homework, make your own decisions, disclosure. But sometimes I just think it's interesting. This is just one of my watch lists. It's a bigger watch list. And then as, you know, I comb through it on the weekend, I try to set a plan in place to put it on a smaller list. So this isn't necessarily my buy list, but this is a list of stocks that are just kind of interesting to me and that I think could be buyable at some point in the next month or so. It's amazing, and I have 26 stocks on this, so we're going to go through as many of them as we can to take a look. Let's just get started. Funko, this is a toy company, and this is definitely intriguing me because I mean, it's been way extended even since it's got on my radar, but this thing is just absolutely taking off. And you can see it really took off when it had that earnings report of 400% increase earnings per share. Sales are increasing. Now, again, don't go out and buy these. You know, it's probably about to report. It looks like it's about to report in a couple of days. So always keep that in mind. But it's just interesting how quickly some of these stocks can just absolutely take off. You can see from right here, and I talked about this a few months ago, as something kind of, if something looks interesting to you, right, and then is creating a consolidation, it's better to pick the middle of that consolidation and try to buy as it crosses that point than to wait till it's way up here, because most stocks don't go off parabolic like this. They break out and then they start to pull back, and then if they're a good stock, then they'll keep going. But it's just interesting here. Let me get this off this chart. It's interesting how smooth and neat it has been, and now as it's getting up here, it's starting to get a little bit sloppier. But that's why sometimes if you're hanging in a stock like this, it's worth looking at the weekly chart. Look at all this accumulation. I have not seen a liquid stock like this that's just gone straight up in a minute. So it just looks really interesting. A lot of accumulation. Looks like the most recent estimates were revised upwards. Not really good return on equity. That's not very exciting. Pretty good sales. Earnings has been spotty, but I'm guessing something was said in this earnings call to make somebody feel like this was going to really take off. Some of these I'll go through a little bit quicker than others. So Spotify, I don't really like companies that just have never produced a profit and aren't even estimated to produce profit. You just don't know. But I mean, there's a lot of people that want a piece of this, the number of mutual funds that own it. But it's in an uptrend, and that's what we're saying. The sales continue to increase. If we go to the daily chart, it's a little sloppy probably for my likes. It's just kind of hard to play unless you were to just buy on this day. But sometimes when that happens, if you pick a stock, and I talk about wanting to buy it towards the middle of the pivot, somewhere around here probably would have been your entry, because you can see as it broke out, then it tries to shake you out and comes all the way back down here. So a lot of times you have to really be careful. Try to pick a spot, and you can place an order in at a certain price, and if you get filled, because I guarantee you, if someone was wanting this stock, it probably came down to the very beginning of the day, touched this line, and by the end of the day, it was back up. Probably extended for a lot of people at that time. Now, maybe you would have bought it here. I like to buy as close to what I think of the support as possible, and then it's gone. So I can see this stock is up very nicely today because it had an earnings report. They must have liked it, but either way, Spotify is in an uptrend. The INSP, this is a little bit thinner, but you have this shakeout pattern that continues to pop up over and over, and it's just one thing I've noticed out of all the trades that I have, mostly the trades I haven't placed. And typically, they're with more volatile stocks. They're with volatile growth stocks where, you know, it breaks out and then it comes back, finds support at the moving average that's curling up under this pivot, just like it did right here, and then it just continues to take off. Now, that's not a clean uptrend by any means, but a lot of times the most powerful stocks aren't. But again, I think how you would have wanted to have played this is wait for that shakeout as it breaks out, pulls back under the pivot, finds clear support of the 20-day moving average. There's your entry. Same pattern, Pet IQ. This is a really, really strong stock that did the exact same thing as INSP did. It broke out, could not clear this level, found support, reversed right at the 20-day moving average. Unfortunately, I missed this one. And as this was happening, one thing I noticed, these patterns tend to happen. So you have a really, really strong uptrend and a really, really strong stock. Then the market pulls back. But again, sometimes pullbacks are literally just pullbacks, 3-4%. It might look scary while it's happening, and then the market finds its footing. A lot of times these shakeouts happen in the pullback. So, and that's why sometimes it's harder for me to play these. But sometimes you just have to close your eyes and press the button, and then it takes off. So again, we're really just looking at growth stocks here. Look at this. So this is, again, Car Gurus, pretty choppy. Broke out of a cup with handle, but you can see it broke out, came down under the pivot, found support of the 20-day moving average, and then it took off. You can see a pattern here. Well, I can see a pattern. Now, Keysight Technologies, I don't know if this is something I'd ever actually buy because the last couple real moves it made was on earnings. So you can see that it popped right here on earnings, then it went sideways for a quarter. Then it popped right here on earnings, now it's on sideways. But what's interesting is that it is holding above the 50-day moving average after a gap up. So has a little bit to go before earnings. Looking pretty bullish here. Roku, I just got my first Roku, so it's pretty interesting. I do think the cord cutting company this could probably be a long-term hold if you can sit through moves, but you can see right here, it has, I mean, really, it's still trying to just find its way in this big, deep cup, but you can see that it keeps, pops, it pulls back, it's finding support around the 20-day moving average. So I don't know if I really like this entry here, but this is a stock I have on my watch list. It's expected to go profitable next year, and the sales are pretty solid. Essential Property REIT. This is a new IPO, and every IPO that comes out, I always check it out. It's got some pretty impressive sales growth, earnings growth, triple digit last 4 quarters in a row on both sides. It is, and I don't know the personality of the stock yet, and that's kind of what bothers me. It's just maybe a little bit thinner, but you can see right here that it broke out of this IPO base, and again, came down and it touched that 20-day moving average right there, but it is now just hovering in a very, very small zone. And you can see right here that it's creating, a 3 weeks tight pattern, probably will by the end of the week, but it's looking kind of bullish to me. But some REITs, they can look bullish and then go sideways for 3 years because, they're more dividend paying. So I just kind of have my eye on this one to see what it's going to do. This is something that I want to own, but, here's my case for this. So PAGS Digital. This is basically a Brazilian little mini microprocessing payment company, not like Stripe, just like the Square that we have here in the States. But it's really interesting. I've noticed over the years, you got Stripe, you got Square, you have some of these processing payment companies that they make big moves, and I'm not saying they're easy to hold, but look at this sales growth right here. Pretty good earnings, really nice return on equity. Now, emerging markets was in the crapper and has been is starting to turn around a little bit, but still in a downtrend right here since its IPO. But it IPO'd at 2150, must have gapped up huge, made a move, and then just probably rolled over with emerging markets. But man, the fundamentals are there. I think it's about to report on 7/28. So, and now it's starting to move above the 50-day, or excuse me, the 20-day. This is something I'm watching. It's just, again, I've seen, how some of these other payments processing stocks move. It's an interesting way to play the growth of the emerging markets, the growth of some of these Latin American countries. It's a pretty big company. So it's a nice niche, and the earnings are estimated upward projections over the next couple of years. Simply Good Foods. This isn't necessary. This doesn't excite me. But what's interesting is the move from 13 to 17 very, very quickly. The fact that it's really not giving up anything at all. It's consolidating pretty nicely above 16. I don't know if I'm not saying to buy it here. The sales are, low or high single digits, so nothing to write home about. Very good earnings, but all of a sudden, if the market goes out of favor and some of the more staples get strong, their groups get really strong, and then you have a stock like this that is potentially the strongest stock in what could be the strongest group if the group comes in favor. It's already has a 92% relative strength rating, so something I'm watching. This one's too thin. I'm going to pass on this. Okay, so you have, let me get a drink real quick. Okay, so I have another Colony Credit. So pretty good earnings, 164% this year, estimated, always estimated. You have a pretty good, the last 4 quarters, pretty solid sales growth. Typically, I will not get into anything that has a negative sales growth because there's a lot of reasons earnings can go down. Maybe they're investing in infrastructure. There's a lot of reasons earnings can be spotty. In my opinion, there's really no excuse for negative sales. So this is pretty solid for a REIT, 8.2% yield. On the daily chart, what interested me is, it made a really good move above all these pivots. You can see that it came kind of pinballed in between these spots right here and then hit it again and then went up. It's kind of coming back and consolidating. Now I'll bet above the 20 level. Lots of volume coming in right here. So REITs, if interest rates rise, typically that has a negative impact on REITs. But this one's looking kind of interesting. Trade Desk, this is a sore subject because I had this way somewhere in here, and I made a little bit of money. I got bored and sold it, and well, look at it. It's probably almost tripled since then. So, but not that I would have sat through this anyways. But you have pretty good earnings, north of 20%, really solid return on equity. You had this, when it popped up on screen, just this massive, massive gap up. It takes a lot of power to push a stock up 43% in one day. And it's not a thin stock either. And it's just, it hasn't given back any of it. So it still fights. It's sitting on the 50-day moving average, literally. Not a lot of accumulation or distribution since somewhere around here, or pretty much since the move. But if it finds support here, that's only 4% above it. It's could be an interesting entry with a tight stop. REGN, biotech, big cap. You can see it hasn't done anything for several years, as a lot of the large cap biotechs haven't. But it's creating a consolidation above the long-term moving average. You can see right here. So, it broke out of a pretty long-term downtrend right here, moved higher. It's reporting in 7 days, so I typically don't buy stocks that close to reporting. But kind of looking interesting. Maybe it pulls back a little bit, but I'd probably wait before it reported, but it's looking like a turnaround. Jazz Pharmaceuticals, again, another mega cap that hasn't done anything in many, many years, but look how interesting it is. Hasn't gone anywhere since the middle of 2014. Several years it's been in this long time for shareholders to be frustrated, but look, it's getting tight right up close to this big, long-term, probably overhead resistance. To me, that's a bullish sign. It is still above the 50-day moving average or the 10-week. Same thing with Medtronic. You have a lot of these medical stocks, whoops, that's kind of a bad place to draw it, haven't gone anywhere for a while and now are at the upper end of the range of a long-term trend, overhead resistance. So I'm seeing a pattern with some of these large cap medical biotechs. They're all coming out of these long-term consolidations. And I don't think that, I wouldn't look at them as swing trades, because if they're coming out of a long consolidation, to me, they're longer term holds unless they just roll back over and fall back in. XO Group, pretty good. What interests me is just this mega move. Lots of accumulation. Accumulation is something I always look at. And now it's really consolidating sideways above the 50-day moving average. It does report, so I definitely wouldn't buy it before reporting. But this is one that's looking interesting. Curo Group Holdings. Disclosure, I do own some of this, have for a while, but year over year estimated earnings per share growth, huge return on equity, sales growth, earnings growth, hasn't closed below the 50-day moving average really since it IPO'd. You can see that it consolidates and breaks out, consolidates and breaks out. There is some distribution around here, but outside of that, it really hasn't been. No one's wanting to sell the stock. Now, the stock's going to report on Monday, and I'll be traveling with my family, so I hope for the best. But so I'm not telling you to go out and buy this, but I just want to disclose that. But if it gets close to the 50-day moving average, I'm very disappointed in myself because I wanted to buy more right here. The market was pulling back hard, and I didn't, and then, of course, it did that. This one's too thin. Let's go up here. So again, you have this pharmaceutical company, ANI, hasn't gone anywhere for years, since 2014, and is creating very tight consolidations, knocking on the door of an all-time high, or at least a multi-year high. So to me, that's bullish right there. Stitch Fix, pulling back pretty good. I've seen some of these stocks, you got the Stitch Fix, you got the Grubhubs, some of these internet stocks or subscription-based stocks, they're not easy holds, but the kind that revolutionized the way we do things. Like, Grubhub revolutionized, the way some people order food in big cities, right? You have Stitch Fix or can change the way we order clothes, right? In a kind of a subscription model. So since the sales are growing pretty nicely, I'm guessing that they are massively, and I haven't looked into it that much, but I'm guessing that they're pretty massively investing in distribution centers, which is why they have negative earnings. But the fact that there is a lot of accumulation stepping in, that's not you or me buying that. So now it's making new highs, and if it pulls back here to the 50-day, I'd pay attention to it. Kronos Group, Canadian marijuana biotech stock, projected to have a pretty nice increase in earnings next year. But, I was really excited about the marijuana industry because all the stocks were breaking out of downtrends like this. And we did some swing trades earlier this year and made some money. But they just could not get going. They went up a little bit, pulled back, went up a little bit, and then just rolled over. This does not look like anything I want to buy anytime soon. I'm just trying to keep my eye on it, but technically the stock looks ugly. Let's not look at that one. Pivotal Software, this is something that I've had on a real short list. So you can see that it broke out right here, but it broke out on below average volume. And it's reversing today, but then on Tuesday, it tried to have some follow through and then just got slammed down. And that was pretty common across some of the leading stocks. I mean, look how high this thing went and how far above it still is above some of the longer term moving averages. This looks incredibly bullish to me, but it really hasn't had any follow through. So the way I see it, it just needs a little bit more time to digest these gains. It's not ready to head higher. Same thing with this stock, ZS. It is in the same sector, the software sector. It's created a bullish cup with handle. I wonder if the weekly chart looks better. Not really, but it's created a bullish cup with handle, and you can see that it's just, I don't know, I haven't seen any accumulation or distribution really since the bottom right here. Definitely no accumulation on this right side, so I'm kind of interested to see what it does. It looks like it needs a little bit more time as well. And that might have to do with the overall market. Like right now, I'm not really seeing a lot of leading stocks just make momentum type moves. So it's just something that I'm kind of keeping my eye on, and I really like the fast moving, the momentum type stocks. But right now I'm not seeing them move, even though we are in an uptrend. So it's just something worth watching. Facebook, this stock kind of intrigues me, and I'll tell you why. We can go to a smaller term chart. 30 minute. No. Or if it'll just show 5. So, way down here. Okay. So here's what's interesting to me about Facebook. And this isn't good either. A lot of times what happens is, and I expected this to happen today and I was wrong. I read last night, like before I went to bed, that Facebook was just gapping down huge. And I was thinking, and a lot of times what happens with these Wall Street darlings is it'll gap down in the morning, it'll find its footing, and then midday it'll come up. And just major buying pressure would happen. And then if it really is not a good stock, it'll sell off into the close. Well, in my opinion, that midday pop never happened. You can see it happened a little bit right here, but I wouldn't really call it that. And then it just kind of came back to the low of the day. So why this is interesting to me is there's not a lot of bids for this stock. This has massive volume today. 139 million shares versus average, I don't know, maybe 17 million. I mean, it has, 10, 12 times the average volume, and you're not seeing the support come into the stock. So I'm not saying this is going to continue to gap further tomorrow, but that interests me, the fact that a lot of times you do have that midday pop, and this has been such a Wall Street darling. Everybody wanted to own it. And as far as and I'm not saying, if you want it, I'm not telling you not to buy. I'm not trying to discourage you. I'm just saying that during the day, I thought there would be some more buyers stepping in to support this stock, and that has not happened. There could be some deeper underlying fundamental issues, and I did read the quarterly earnings report, and it didn't look good. There were no real metrics that I just thought was awesome. They were, warning of, sales deceleration, mega earnings and profit margins impacts based on, the investments they're making for security, get rid of fake accounts, things like that. But I don't know. I'm a little intrigued. I'm not going to lie. So I hope this was helpful. Next week, I will not be recording a webinar because I will be on vacation. So I will see you the week after that.